Hey everyone, this is a trader investor, and in this video I'm going to show you how I use a strategy to fade gaps when they occur. And this is specifically focused on the SPY where gaps occur very regularly. Yesterday I showed you a strategy on how to enter the first few minutes, first few half hours of the trade for continuation of that gap. And today I want to show you how to take advantage of a reversal of that gap or a continuation based on additional criteria that I use. So the first thing that I do is I use the hourly chart and I zoom out, and what I want to do is I want to draw support and resistance lines. This is what I want to draw for now, and I don't want to see current, so I will move it out. That way I don't get biased about current. So I'm zooming out and I'm trying to draw support and resistance. That's my focus. So I start, just whatever I see, some areas that were acting as support and resistance strongly. And by strongly, I mean we have been there a few times. Like you see, I didn't use this one because I'm only seeing it once here. But you can say, well, it touched again here, so let's just add it. I'm okay to add it. We can also remove it later on. So, just want to focus on main ones being multiple times touching. And keep in mind, support and resistance is a zone, not an exact point. So when we draw something and we come close to it, that's all right. That's what we will use as our area of support and resistance. And sometimes, they might get too close together. Sometimes they're far apart. If they're starting to get too close together, we just eliminate a couple and just treat that as a zone. So it's all about finding the zone. So once we are in our drawing and we've finished drawing our support and resistance, the next thing we want to do is then go and find gaps and see what happens to those gaps. So we'll just randomly start here. It doesn't matter where we start. We just randomly start. So let's start here on December 1st, 2020. So what I want to see, the first thing is in relation to recent support resistance, where did we open? So if we open at above previous resistance, I want to see what price does to reverse back to that support zone, or does it continue to the next zone? And so, first hour of trading, there's not much action. I want to see, now if I zoom out, what I want to see is this first hour zone broken, but nothing happened, right? Nothing broke, so we continue to move up. So there was no entry. What I want to see is a rejection at the next level, right? Rejection at the next level, rejection at the next level is what I want to do. So that there's a fade when it's rejected at the upper limit or lower limit in case of a gap down, and then there's a continuation when it's a rejection at the lower limit for up gap and then the upper limit for down gap. So we'll see examples of both. So in this instance, we had an up gap. So I want to see a rejection at resistance or a rejection at support to enter the trade. So when we get a rejection at resistance in this case, which happened a few days later, and this strategy will continue to work from the first until we get the next gap. So when we get the next gap, in this instance, it happened on the 14th, I am done with this part. From the 1st to the 14th, this part is done. So what I mean by that is any gap that I'm going to fade or continue based on recent support resistance ends for this session and I go to the next one. So in this case, on the 9s, we rejected resistance, and price continued its way down to our next area. And our next area, because it's a zone, when we get to that space, this is where I will draw my zone. When we get to that space, and I will, as a reminder for myself, I'll draw it as a zone. When we get to that space here on the 11th at the open, 6:30 a.m. Pacific time, when the market opened on the 11th, we tagged that zone and I'm exiting. I'm not waiting to go all the way down. I tag it, I'm exiting. Even when you look at the 10s at the open, we came very, very close to it. And that's okay if you say, this is good enough for me. I'm tagging it and I don't want to risk, playing around, dancing higher and risking it all the way up. So even if you take it on this day around 63.65 area, that's perfectly fine. Exit as well. So because support resistance is a zone, once you understand the zone, capitalize on it. This is great. Now another thing you can do here then, on the 11th, a few hours later, price rejected this zone and it closed above it at 10:30 a.m. Pacific time. So around lunchtime, around 1:30 Eastern, we negated this down move, and as we enter here, it's a valid entry as well. And our stop is usually the other side of the support resistance. Wherever you enter, the other side is your stop, because here, we're entering at 369 and our stop around 371 is a $2 and change stop for a potential $3, $4 move from 369 to 362. This was a $7 move, so very, very good risk to reward ratio. Same thing here, 365 is our entry, 362 and change is our stop, so $3. And from 365 to 371, this is a $6 potential. Yes, we're not going exactly for that 6, but it's better than 2-to-1 reward, so this is a great entry as well. And in the setup, what happened the next day, we had a gap up. Usually when we have a gap up continuation, if it's an inside day, this is great. If it gaps up above the previous resistance, I'm already exiting from this trade because I don't want to risk having to come back down. But if it's an inside day gap up, I might tighten my stop and just see what it does. In this case, I would have been stopped out near these recent highs as a stop. So I would get out here. It's for consistency. It's for consistency. So then, we move on to this day. This day we had a gap up, but we're dancing between the previous day support and resistance. And as you can see, a few days later, we opened above it, but price got pretty much rejected, right? We never stayed above the gap here. So in this case, there is no trade. And, we want to see, do we stay below, above resistance? And since we have nothing on the upside, I'm just a little bit more cautious when I have no target on the other side that I'm looking at. I could draw a fib retracement and have that as a target, but for this kind of strategy where I'm playing fading the gap or gap continuation, I'm just not focusing on potentials. I just want to see clear indications. So we had a gap up. This setup is already out of the way because we have a new gap up. I want to see, do we come test the support to continue, or do we break that support to go to the downside? Because I don't have anything on the upside, I don't have a risk reward that I can calculate on this one. I am not entering anything yet. I want to see a breakdown of the support zone. I want to see the next gap. So it's okay to be on the sideline. So here we gapped down. So on this gap down on the 18s, what I want to see now is price retest, support, resistance to go to the next leg down. So in this case, we came close to testing it. It's not close enough. I mean, 370 to 371 is about $1 move. You know, if you can go down to a lower time frame, you can try this, but I prefer not to keep going down to lower and lower time frames, because this is, for me, it's about trading smart, not about trading all day looking at charts, just a few minutes a day. So so in this case, I didn't come up to the resistance enough to see a very clear signal of a rejection, so no trade for me. Next day we have a gap down. So this previous day, this this zone here is now gone. I am not trading this anymore. I'm not trading this anymore because we have a new gap, right? We have a new gap down day. So on this gap down, it went all the way down to support and it got rejected. So this, I love this setup. We came down to support, got rejected, and I'm confident on this next bar, even though I don't see any candlestick pattern that says, hey, I'm reversing. I got rejected at support, so I'm entering here. I'm entering at 364.50 area. I have my stop right below this low, 361, about a $3 and change stop loss to hit for the next move up. So from about 364 and change to 371, a $7 move. Very great risk to reward, right? This is why I want to target the other side. Now on the 21st of December, we had this big spike. I don't know if it's an anomaly or if it's a true spike. Sometimes I get this charts that I see this weird spikes and I ignore them. So I don't know what happens, but you know, if this was truly the case, if I was in the market and happened to have seen this, I'm exiting at this high. If not, I'm just monitoring it. I'm just monitoring what happens, right? I'm monitoring what happens. We have a new gap. I'm already in a position, so I am not exiting my position because the new gap is also a gap up in my favor. It is going in my direction. I'm not exiting my position, but I'm watching it tightly to see if we get to a new rejection or if price wants to continue to come down. I'm tightening my stop, and then we have a new gap that broke above my resistance. That's my exit. So if this was not an exit that I executed on at 9:30 Pacific on the 21st, then it's on the 28th. So this play is swing. It's not day trading, it's swing trading. You're capturing the movements of gaps and fading them, or seeing a continuation of that gap based on support and resistance. That's what you want to focus on. So here on this day, we have another gap up where I don't see any clear indication where my next target is. See here, I've talked about this area where I don't know where my next target is, but here I have already drawn this based on the future. From this date, it's the future. So it's when we got to this area that became resistance. So here again, I don't know where my next area is, so I'm not very comfortable entering this trade. So I'm waiting for a new gap. So here, as you can see, there was no new gap. There was a gap here, but there's no new significant gap on the downside, so there's nothing for me to enter. There's no gap play. There's other strategies, but there's no gap play here. Here we gapped up, and now here I could potentially add this as a support zone for me to play around with, right? So this could be a support zone because we're making new highs and we're testing this. So this could be an area. Now once we get to the 15th of January, I have a resistance line that I'm adding. I'm adding this resistance line. We have a gap down. We gap down to this zone. This zone, the gap down got rejected, beautifully rejected, and we can enter here and we can target this highs here, 381. So 376 to 373 and change as our stop, $3, and then we are targeting from 376 to the 381 area, $5, better than 1-to-1, right? This is like a 1.5 to 1, almost 2-to-1, because 376 to 381, right? Close to 2-to-1, but not as quiet. But I'm happy with that trade. And once we enter that trade, this gap up actually meets our exit. So this is how I traded. So I look at gaps, I look where we are in terms of support resistance. I want to see rejection on either side of that gap, where the support is and where the resistance is. I want to see a rejection at those lines to enter the trade. So if it was a gap down, the rejection means then it's a fade, right? We're going to close this gap, we're fading it. If it's a gap down and the rejection is at the higher end, then it's a continuation of that gap for further downside. So you combine support resistance and make it simpler on how I trade gaps to fade them or a continuation of that gap. So I hope this is helpful to you. If you have any questions, please feel free to reach out and I can go into more details on how we can take a look at this. So thank you everyone. Enjoy the rest of your day.